Yeah, thanks, Kelly. Thanks for having me.
What are you seeing in terms of tightness or weakness in the market overall?
I think the year has started out in a positive way. According to a bunch of third-party data sources, and at least what we're hearing from dealers, January new cars sales seem to be up year over year.
Really?
So when you look at the new car segment, as you mentioned, supply is starting to come back. That's been a big hole in the market, a problem that we needed to solve. So as the OEMs are starting to, their sort of supply chain problems are starting to really move on, and we're starting to see cars show up. So that's one positive trend. Another positive trend for January that we've seen is that year-over-year used car sales are also slightly up.
Are they? How is that? Well, let me back up for a second. One of the most shocking stats from the entire pandemic is how much used car prices rose. I mean, in some cases, we're talking about they doubled. So it's hard to tell what's going on. Are prices coming down? And how do we sort of separate that from what might be going on with sales? And what does it mean for your business overall right now? Yeah, so it's really fascinating, Kelly. Before we talk about ACV, let's look at my target customers, franchise dealers, independent dealers. These dealers are diversified businesses with supply coming in from new, supply coming in from used, and they have different options for consumers. So if a consumer has lower credit, they've got banks and cars that help sort of fill that gap. If they have a consumer who qualifies for an OEM sort of package or offer, let's say a low interest rate offer from an OEM, then they've got that specific product or service for the consumer. OEM meaning Ford and GM and any of the major brands. Yeah.
That's right. So really, when you think about what these dealerships have, is many of them being large groups holding many different brands. They've really got different products that help sort of this current state.
What is the mix you would say now versus a year or two ago?
New is still lower than pre-pandemic. So when I say year over year, it's slightly up. Let's say it's up about 5% every year. That's still low compared to 2019. So we're not saying things are yet back to normalized volume of 19. But having said that, I think just the positivity of year over year being slightly up, among all the other things we're hearing in the economy, is positive.
Oh, sure. And it makes you wonder, though, so there has to be a normalization, I guess, going on in the used auto market. And are you seeing prices there falling? Do you think anyone who might have had to stretch to buy a used car, let's say they wanted a new one, couldn't get it, so they bought a model a year or two old, but they paid a higher price during the pandemic. What's going to happen there, do you think?
Well, we've seen consumer expectations will need to be moderated, right? They've been hearing about how valuable their used cars are for the last couple of years. Having said that, dealers want to buy these cars. So what we're helping is helping dealers and consumers really on expectations. And it's a fascinating thing. You're really seeing this normalization being, what's the condition of the asset? Which city is that car being traded in at? We're seeing cars on our platform travel 400-500 miles per vehicle, meaning traded at one dealer, and it's going 400 or 500 miles to another market.
Wow.
So the way is you mentioned normalization. Look at normalization as, what's the condition of this car? Where does this car belong? What part of the country? And does the dealer have the tools and services to make sure they could put together that trade with that consumer?
The question on my mind is, are we going to see in the auto market these shortages turn into a glut? We've started to see this elsewhere, where we've seen it, you could say, in the energy markets. Look what's happening with natural gas, semiconductors, chips. We've seen gone from shortages to gluts. On the auto side, are we going to go from shortages to gluts, to overproduction, too many cars, not enough buyers, and price declines?
Most industry analysts aren't predicting that for auto this year. So let's think about why. We still are coming off a massive shortage of supply. So I think it's going to be a brand by brand or OEM by OEM specific. For example, Hondas and Toyotas, we still don't have enough of them. So you still see the used car values very high for Hondas and Toyotas. There's only a few brands where we're starting to see new aged inventory start to really creep up across the franchise dealers.
Can you tell us who they are? Or
I'd rather not throw any brands into it.
Let me pivot then and ask you one final question with the remaining time we have. Tesla is kind of outside of this whole ecosystem in some ways because they have the direct-to-consumer model. But is there anything you can glean from where you operate as to what demand and supply is like there?
Well, I think one thing I can share is obviously Tesla's in the media quite a bit. Tesla fits with a specific consumer, right? Tesla fits with a consumer who's okay with a full electric vehicle, a consumer
full price tag,
and that has the credit scores when they go to the Tesla website to buy that vehicle.
True.
So think about it as like check, 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 right? So let's think about consumers going to a franchise dealership. They may have low credit.
Right.
They may need a specialized loan. They may not want an electric car yet. We see actually hybrid plug-ins more popular than pure electric.
Well, then that's good news for Toyota that they need these days, I think, in pursuit of that model. George, we have to leave it there. It's great to get a little bit of a pulse check here on such a difficult market to penetrate. Thanks for your time today and for coming down.
Yeah.